There we go. Righty-ho, guys. Thanks for joining us for Trading Buddies Thursday edition. It is now the 25th of the 5th, 2023. And my name is Jeff. Ash will be joining me shortly. And, of course, today being Thursday, we have Phil with us as well to talk about, I'm not sure what Phil's talking about today. I haven't spoken to him the last couple of days because I've been flying all over the place. Let's start with gold, shall we? And see where that takes us. We'll use this screen right there. Okay, hopefully you guys have now got my gold 1 hour chart up and running. There it is. I can see it going out to the right places, I think. Hang on 2 secs again. How's the week been, everyone? You can answer that in the chat box. Been a heck of a week for me, as I said. And when you go away for a couple of days, it's really difficult to get back in the swing of things because the work that you weren't doing while you're away suddenly gets triple and double and all that sort of stuff. Anyway, hopefully the next day or so I can catch up. I've got a course to do on Saturday. My goodness me. When will it end? And it is very, very inclement weather down here in Tasmania, I can tell you. Raining, winds, all sorts of things going on. Fires are light, though. As soon as this is finished, I'm going down to the fire and a nice glass of wine. Righto, we'll go through gold and what it's done throughout the week very shortly, but wow, looks like a beautiful range forming there to me. Nice little box. And for that reason, I would have a bias to the upside today. But where is our range? That is the 1 o'clock. That's the candle we're using. So that is not the high of the range. The high of the range is this high at the moment. May well be taken out in the next minute or so, however. And the low of the range looks to be either that one, 1955, that one, 1955, that one, 1954. Okay, so the low is going to be 1954. We can put that in. $19.54, which is the current bar. That'll be our sell price. Looks like a terrible place to sell, but anyway. And the buy price at this point will be the top of that bar there, which is 1961. We'll round it up to 1962. I'll show you a good reason why we do that, or why I do that, very, very shortly. And it would have saved some bucks, or did save some bucks, because I left that thing in the market whilst I was getting ready for the plane. On Monday, let's go back and have a look. So Monday, the range was from, where's the 9 o'clock bar? That must be it. That's 4, 5, 6, 7, 8, 9. So the low was here, right on that red line. And the high was there, which was 1982.5. And if you're in the room, you'll remember I took that up to 1983, which was the level that we used. 1983. And you can see that was actually the stop loss, right? Because we were triggered short. This was the stop loss and never got triggered, and you got the cash. Had you used the high of that bar, you would have got stopped out. That's why we do that. Well, that's why I do that. All right. We've now got a new bar, so let's place the orders. Now, the reward to risk on the long is not fantastic, but it's not dreadful either. Well, it's pretty dreadful. So we've got a $7 risk for a $4 reward. Not fantastic. To the downside, you've got a $7 risk to a $7.50 reward in the $8 reward. So that one's not too bad. Should we take the trade? That's the question. And the answer is going to be, why is that line there? Oh, that was our entry the other day or whatever it was. The answer is going to be yes, we will. And I'll place those orders now. Firstly, the buy, which was 1962, as I recall, yes. 1962, and the stop loss, what did I say it was? $9. 1954. 1954. It's $8. And the take profit will be the daily pivot, which is at 1966. 1966. So four for eight. Yeah, half to one's not great. But like I said, better than not. And the short is the reverse of that, of course, 1954 to 1962. That'll be a sell stop. $19.54, stop loss, 19.62, take profit. We'll just use DS1, if it'll tell me what it is, 19.46. 1-to-1, as I said. Right, there's the trade for the day. And like I said, Monday would have been a winner had you put your stop loss in the right place. Tuesday, looks like you might have had to have taken profit reasonably early. There's the high. 9 o'clock bar is there. There's the low. So you would have been triggered short. And you would have had to take profit at a very poor reward to risk to survive. Otherwise, you would have got hammered. Yesterday, the high is there. The low is there. And you would have got hammered because your target would have been the daily pivot. So loser, winner. Let's see what today brings. Last week it was 4 winners, no losers. So that is gold. Let's leave it. Oh, no, let's leave it alone. Let's have a little look at it actually, because the bottom of that range, as I said, is exactly where we are right now at a strong support level. So I couldn't be thinking of entering short here. If I was still short, I would be okay with that because I'm anticipating there'll be a bounce. But like I said, with our hourly breakout trade, the daily pivot does look like it might provide some support. So I think that's the line in the sand today for gold. If it hits here and bounces, then I think we'll probably see another attempt at breaking that level. If it doesn't, then we're back here. Pretty obvious, right? So range trade, I think a range trade's the best way to go with that. Maybe on a smaller time frame, if you've got something like a double bottom, which you have, and a higher low in here, that would make sense to me. You've got a trade line through here, you've got a trade line through here. So that low there to that low there. False break short makes sense. Break and retest makes sense. Target daily pivot. That was easy. Now, all it's got to do is pan out. Now, let's catch up with the trades that I left with you with on Monday, CAD Swiss, which we are still in. and trying to fight our way back to break even here. I like the shape of this still. High, 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 low, high, 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 low, double bounce off the monthly pivot and the trade line. It just can't get through this horizontal level. I think if it fails today, I'll probably get out of it. If it can get through here, however, we've then got another issue with this trend line, but we'll see if we can get through that. So I'm not doing anything just now, but if we do get a close below that line today, I'll probably close it. The other one was Kiwi versus the dollar that we took on Monday, and that has triggered, courtesy in part to the RBNZ's, or the reaction to the RBNZ statement, which happened overnight, yesterday. I don't know. I wasn't here. Looks like yesterday, though, with that big bar. Yep. I didn't read the statement. I note that they did increase their interest rate by 25 basis points as forecast. That wasn't enough for the market, obviously. But if you look at the dollar index, which, of course, we've been tracking that one as well, suggesting that it was going up to this trade line or the 105.29 level that I've got here on my chart, and that appears to be playing out quite well. Hopefully, some of you have been trading dollar yen because of that, because I've been calling that since, where was it? Way down here somewhere. And that just continues to go and go and go, looking for the high of that ascending channel. Interestingly, I don't see any form of resistance above this level here, 130 or 100, let's call it 140. I think if it gets through there, goodness me, this could even take on the highs here. Why? Because the chart's telling me that's why. Fundamentally, interesting. Again, it goes back to, I suspect, and I've got no idea what's been going on in the markets, as I say, because I haven't been here. I suspect no decisions yet been made on the debt ceiling, and I guess that's still flavour of the month. But until that changes, things like gold, things like silver, that we were calling short on Monday as well, looks like that has played out. You had the nice break and retest here of the range break, and on it went. Still the case. One thing that didn't happen here for me is I really wanted this to come back and give me a clear lower high once we re-entered that underneath that trend line. And it didn't do that, but the doji bar was good enough apparently to trigger this. I still think if pullback is on the cards, and maybe that's today. Maybe that's exactly what we need today, is a pullback on those moves, particularly on the Kiwi yesterday, but also on the dollar. Everything that was against the dollar yesterday had a shocker, euro dollar included. And that gives us opportunity today, of course, to trade the daily pivot tests, which, of course, is still on. So the further this goes down, the more I would be willing to trade it long, providing I have a setup. There's nothing like a setup there at the moment on the hourly chart, certainly the same on the 30-minute chart. It looks a fair way away from there. The only way I could see this panning out at the moment would be a break and retest of that trade line. Or if you really wanted to be brave, you could get maybe another high test bar sitting over here, or even something that looks like that sitting over here. Good news for those people who like the slingshot candle patterns. Our good friend Peter, the programmer, let's call him Peter programmer person. He's been programming my candle patterns into the market scanner. So if you do have a market scanner, that will be an option as of, I think I'm offering it to the people who subscribe as a result of Saturday's. Am I doing here I am. What am I doing? I'm doing a presentation on Saturday, and I'll be offering that as part of that. That'll be a free trial. And what it's actually doing is picking out, actually I'll give you a little demo later in the show if we've got time. But enough of me for now. Let's get over to Ash and say, g'day, buddy. How's the week been?
Good morning. Yeah, it's been good, mate. It's been good. I had a bit of a struggle towards the end of last week, but this week's been pretty stellar actually. It's been very, very good. It's
Good.
it just because the market behaved in the way that and it doesn't always do this, but it behaved in the way that was pretty much expected, I think, for most of it. You know, certainly on the fundamental basis, the Kiwi, if not a little bit extreme, you know, if we kind of like look at the move, the Kiwi, which I wrote in the Telegram channel actually, that that interest rates tend to reverse a currency's value. Or you know, towards the latter part of the cycle, that's what they tend to do. And the reason for that is because investors start anticipating that it's the last one. You know, every single time it's the last one. We've seen it with the dollar, we've seen it with the euro most recently as well, and of course we saw it with the Kiwi. I mean, the Kiwi just, and I say it was a bit surprising because I was expecting this to happen maybe next week, the drop to start happening next week. But the fact that we got a sell-off straight away was probably more to do with the rate, was to do with the statement rather than anything else. And of course, the retail sales number they weren't particularly good either. But you know, setting up the potential short in the Kiwi. So Kiwi
well, it did set up. Remember, we traded it on Monday.
Sorry, no. Well, I don't mean the chart. I mean the numbers.
Okay.
The retail sales numbers actually set up the weakness in the Kiwi because it just kind of seemed to set the tone. I wonder whether we might see some stabilizing here, and you know, just generally speaking, with the dollar, the dollars, the currency of the day. Initial jobless claims later on, GDP later on. And of course, we've also got PCE numbers as well, PCE price numbers. So there's inflation numbers, there's jobs numbers. We're right on a level of support. I wonder whether we might start to see the dollar just ease, not necessarily ease back to, sorry, the Kiwi and the rest of them, not necessarily go back to the upside, but maybe at least stabilize in this particular area. The debt ceiling is causing the issue. You know, the debt ceiling is just making people very, very uncomfortable. And kudos to Phil. I mean, you know, this is just almost on the money. Last week, Phil said that the 22nd, we need to look out for the 22nd. This is the bar on the 22nd of on the FTSE, and I traded the FTSE short, which is why it's been such a good week. This is the bar on the 22nd. The 23rd was the reversal. That was yesterday. Huge move to the downside. You know, not nice, easy one to grab. And of course, we're just weakening a little bit today. If you look at the DAX, slightly different picture. This is the 22nd. So actually, the 22nd was the first selling bar that didn't get the high didn't get taken out. So the high on the DAX was on the 22nd, and then, well, you could say that the Friday. But certainly the first selling bar was the 22nd, and you probably would have wanted to get in on the 23rd to start moving to the downside. So price action suggested some downside. Didn't expect it to come through this level, but it has done, and this is suggesting that the time by degrees is pretty good at so far. You know, we got a 1-to-1. It's been really good at predicting the extremity of a move, because even if this reverses back to the upside from here, this particular force and velocity of price action over a 3-day period has not been evident since back here. And interestingly, if you look at this point here, Phil will let you know that that's also a time by degrees number. So we've got, I mean, there was another one in here that didn't really work out so well. So it's 1 out of 2, but the extremities really did start to take hold in the market. Right on the money for the prediction. So and actually, in fairness, this was the time by degrees before. So we've had one here create the upside, one here eased us down, and one here which does ease us down. So you know, on the FTSE, it's 3 out of 3. It's a very, very strong. There's some strong evidence starting to unfold. So so the FTSE looks like it may well come down a little bit further. We've got a trend line down here. And we've got a trend line down here. which might be better because you've got the 2 touches there. So we're easing back here. Now, the good thing about this is that it will also meet this horizontal level, and that would be a buy zone. Now, that will, in my opinion, work out to be a buy zone if they can sort out their debt ceiling issues, because that's really what's moving the market. It's made the dollar very, very bullish, you know, partly because of risk, partly because the Federal Reserve in their minutes yesterday basically said, if the debt ceiling doesn't get sorted out, then that's likely to lead to tightening conditions. So they've basically told the market and the federal government, if you don't sort this stuff out, we're probably going to have to raise interest rates again, boosting the dollar. So we're starting to see some really big moves in the dollar. Now, what that does mean, of course, is that we don't need a whole bunch of information to reverse the course of the dollar. Because as soon as that debt ceiling announcement comes out that they've got some sort of deal, then you can be pretty comfortable in buying anything against the dollar at almost any price because of the velocity of the move. You know, the move has been so strong for the dollar that it's got a lot of ground to make up to reverse. This is gold, may have a little bit more downside. Gold is stabilizing here. But it might come down a little bit more, but you know, that's got plenty of room to the upside. The Kiwi would be the one, I suspect, lots and lots of room to the upside. Aussie would be another one, and the reason the Aussie would be interesting is because the Aussie is almost something trading against the dollar, and also the risk element is problematic. But look where it is, you know, lots of room to the upside for the Aussie as well. The pound was an interesting one because the inflation figures were weaker than expected. The inflation figures were weaker than previous, but stronger than expected. So, so the pound was also something to short, but maybe not quite as clear cut because the numbers were a little bit mixed. And I was looking for a pound yen short, and that really hasn't done a lot. And the reason that the pound yen short was of interest was because it's right on a level of resistance up here, and it still may play out, but I thought the trigger would be from those CPI figures, and that didn't really happen. And you can't really short the pound against anything but the dollar, and of course you probably wouldn't pick the pound to short it against because there's better stuff, but you can't really short the pound because the inflation data is still supportive of further rate hikes. So it's not really the time to short the pound. The yen is a tricky one as well, as is the Swissy, because of the risk aspect of it. Where I think there might be an interesting trade is the NASDAQ. And the reason I think the NASDAQ's of interest is because when we look at this here, the NASDAQ is kind of, it's elevated itself right up here. Yesterday's bar was of course a buying bar, but if you look at the 4-hour, what it's really done is kind of hit this level of this horizontal level here and held itself above it, suggesting that anything below with maybe a lower close would be a short on the NASDAQ. But where it gets interesting is on the 15, and it's because of this gap. Big gap on the NASDAQ. That's a 0.5% gap it needs to fill before it really satisfies the fact that the market doesn't like gaps. That gap has been caused by NVIDIA releasing sales figures that were 50% better than the Wall Street estimates. And of course, NVIDIA are moving into AI. They're providing lots of chips for AI. So because this is really off the back of one company, and NVIDIA after hours was up 28–30%, that suggests that maybe this is a little bit overcooked. So so there might be just a bit of easing to the downside on the NASDAQ. So I'm not looking for a lot with the NASDAQ, but this is still going to be subject to that debt ceiling. So one stock, I don't think anyway, is enough to elevate the NASDAQ and keep it high. I think there's some easing to the downside. So the NASDAQ for me is quite an interesting short here, even though that one stock and many of the other aspects of the NASDAQ are quite bullish. I don't think you need to aim for a lot, but I think, you know, looking at this gap, or at least for the gap to be tested on the lower level of it, is something that I'm looking to do. So I'm looking for a short in the NASDAQ for a short period anyway. And even though you're fighting one particular stock that was very strong, I still think that the fact that you've got that possibility of further rate hikes and a possibility of the debt ceiling not being raised may be enough to kind of spook investors when they start to digest the fact that Nvidia is not enough to keep the Nasdaq elevated. So that's where my focus is, mate. But I do think if you're jumping into the downside on the likes of the DAX and the FTSE, even though there's probably a bit more to go, it's now eminently more difficult to do that. Going long is just not an option. You know, until they flip that decision on the debt ceiling, it's just not an option. There's too much going on. And interestingly, the FTSE is really the most susceptible to the business cycle. And this is basically saying we are in contraction mode, and we've got a big event that could really escalate the contraction of the financial markets. So not the time to really be looking to go long, even though the price is quite attractive down here. We need to see more and hear more from the fundamentals.
Got a funny feeling that we're going to hear that, but we're not going to hear it till Monday morning.
Agreed.
I got a funny feeling that they'll make this decision over the weekend and while the markets are closed.
Yes.
Which means if you do have a thought that that the decision will go a particular way and will be positioned for that, I think you need to be in that position by Friday.
Yeah, quite possibly, mate. I just don't think it's worth it. You know, because
not worth the gamble.
No, I don't, because the problem is if you're live sort of like, you know, in a 24/5 market, at least you can put a stop in place. And if you're, you know, let's say that you're trading a range between a rate decision, and you put your stop at the break of the range with an entry, you know, and both ways you do an OCO. So you know, a rate decision is sort of, I mean, let's say for example this was the range, and you have your entry up here and a stop up here on the short, and you have an entry down here with a stop up there, a stop down there for the for the long. That would be okay in a live market. But the problem is on a weekend is that you might wake up and all of a sudden the price is up here because of the gap. So you could get really badly burned by taking a position over a weekend with such an important decision. Yes, you could be right, but I don't think it would be. I don't think there's the risk to reward is actually valid. I think that, you know, you're probably risking at least as much as your reward, if not more. So I don't think that would be a wise thing to do, and I also don't think it's necessary. You know, I think that there's probably enough downside that we've seen to suggest that if there is an announcement, the upside there'll be plenty of upside. So even with a 1% gap to the upside or 2% gap, there's probably a lot more room to go. So so at that point, I think we can go possibly back to the FTSE, probably the DAX as well is of interest. The Nasdaq is possibly a little bit toppy, but it has entered a bull market. So so the Nasdaq might be of interest to the upside at that point, but I really would like the gap closed in the next 2 days. I wouldn't want to get into a Nasdaq position short and not see that gap closed before the weekend, just in case there is some sort of decision.
Cool. I think then we're pretty much on a similar page. I'm expecting pullback today, no follow throughs at this point, and I'm happy to add to the positions as well if we do get those pullbacks. But that's what I'm expecting. I'm not expecting that we'll get follow through on those big moves of yesterday with the dollar and the Kiwi.
Yeah,
but we'll see.
Yeah, we will see, mate. Yeah. I mean, the dollar is the other interesting thing is the dollar is seasonally the weakest currency. You know, and as we go into the next month and 3 months, the dollar is the weakest currency. So that's the other reason that there's probably lots of time and lots of room to do this. You know, let's say in the perfect world, we see today continuing jobless claims jump, we see GDP weaken, and we see PCE prices weaken. That's going to set up a short for the dollar. Then all it needs is the debt ceiling to be sorted out, and the dollar will go short. You know, and then you're sort of like back into things like gold and everything else. But we kind of need to see this picture unravel, in my opinion, before we see what's going on. Because, you know, let's not forget that the euro actually is down here, and it's down here for a reason. The inflation data from Europe has actually started to significantly come off. it's getting closer now to at least a more manageable position. So the euro sort of moving to the downside is not that surprising really at this particular stage. And same sort of thing with the pound. You're also waiting for the pound to or the UK to actually show some evidence that they are on top of the inflation narrative. Brexit really has magnified the situation over here, and things are still very, very sticky. But I wouldn't want to go short the pound no matter what the setup was at this particular stage.
Interesting. I'm looking at the euro now, and you remember that monthly chart I pulled up at the beginning of the month saying if we got a bear bar this month, I would be buying it at the first opportunity next month. So I'd be putting an entry above that bar, stop loss below
above here. Yeah.
I
think that might be a really sensible trade, mate. I think that's a really sensible way to play it, because if it does, if we do get kind of like the perfect scenario with weakening inflation in the United States and a debt ceiling being heightened again, or certainly some resolution to that, then this is going to get taken out, and you won't have to worry about all the noise in between. So so I think that's a pretty sensible way, I think, to handle this market. Where are we at?
Yeah,
That's interesting.
I haven't changed my mind. I'm still going to do it. It's the one on the underside's the one that's more interesting. The support trade line or trend line, if you like. But yeah, that's got a little bit of evidence there as well.
Yeah, I think so. I think this has got apart from that false break, it would suggest up and maybe having to retest to go, but it does suggest you break through this area. It's got some room. Now, what would that potentially be? Difficult, really, because this is, it started that kind of V-shaped recovery, didn't it? And 32, yeah, it's probably this whole thing down here. Yeah, that would certainly see us somewhere near these highs or back to that trend line.
I think that's only the start. I'm thinking 1.5 again.
1.5 all the way back up. Yeah. Mm-hmm. Yeah, why not?
But as we said before, it's going to cost a fair bit in holding it for that long. So
yes.
You want to find a few positions along the way to make some cash.
Yeah, I think you're right. But yeah, very emotive market, mate. Very emotive market, and these things do tend to take a little while to turn. So even though we are at some significant levels on many of these things now, is there enough to kind of get investors interested? When we've hit some pretty good levels already, I think there's a suggestion that we're probably more likely to continue to ease down.
Cool. No argument from me. Tapas, I'll have a very quick look at. Are you done, mate? By the way, sorry.
Yep. All done.
I'll have a very quick look at the 30-minute euro dollar chart, and then we might give Phil a whole bunch of time today. We normally give him a short burst at the end because we talked for too long, but I think we might hear a bit from him today. Okay, so euro dollar, I said before, untested daily pivot's always going to be of interest to me because of the probability factor of that being or not being the case. In other words, it's being tested. But I'm not seeing anything here that excites me at the moment because I have to have a setup, and the setup has to be a reversal now because we're in a downtrend, certainly on the 30-minute chart. And just about every other chart you're looking at too, the daily's really picking up pace now to the downside. So I need to see a reversal, which would be a double bottom, inverted head and shoulders, morning star, all of the usual suspects. And I'm not seeing any of that at the moment. So until that occurs, that's not going to happen. So you're probably looking at the US session, or maybe even US session before that becomes a possibility. But it is something that I would watch until I went to bed. Righto, speaking of bed, I think he's out of bed. Good day, Phil.
Seamless link that, mate, seamless.
It didn't work, though.
Yeah, mate,
there he is.
I'm here. I'm getting organised.
How you doing, mate?
Yeah, not too bad. I've just I've had nothing planned for tonight. I was going to tell you that, but actually sort of got me motivated a bit. So I've might have something interesting enough to talk about now.
Okay.
Oh,
cool.
mate, do you know what? I think it was poetry, absolute poetry. You know what the time by degrees, and I was looking out for it. You know, I was thinking, you know, I'm going to give this thing a little test out, see if I can use my indicators to kind of see what's going on here. But it worked out an absolute treat. It was amazing, really, to kind of not to see that the market weakened, but to see the velocity of the move of that particular, you know, exactly, pretty much, okay, within 24 hours, the market changed. And it was right on the money with the time by degrees. It was amazing. It's amazing to see.
Yeah, and of course the 24 hours is in our language, whereas the time by degrees may well have been at 10 hours or 8 hours or 11 hours or something, but it's got to wait till the next day to create the action in the market. You see.
Yeah. Well. Also, you did say, you know, that you know, don't get too caught up with the exact date. It's in and around there. We're looking. So it's not like you said, absolutely, this is going to be the thing. Don't get too caught up in the day, and that's what happened. Is amazing. And you know, anybody that's sort of in the room, if you need to see evidence of this, I don't know if you can go back and watch YouTube videos historically on YouTube. I'm not sure, Jeff, but if you can,
yeah, you can on the channel, yeah.
Okay, well, in that case, I don't know which date it was, but it was at least 3 weeks ago. Phil said the 22nd. And it was the 23rd was the start of the really big move. So well done, Nostradamus.
Well, mate, it's nothing to do with me. It's it's the god of the sun that's our friend. I've just got the FTSE again here.
Sorry, guys in the room, don't be afraid to ask questions either. That's looking at these charts, you must be going, what the heck? Just to be polite. Don't be afraid to ask Phil what's going on.
Yeah, I absolutely welcome that, because I can just expand on things that aren't well understood, and it gives me something to talk about, because to be honest with you, once you get the hang of this, it's fairly simple. There's not much to talk about. But until you get your head around it, of course, it's a bit interesting. So, no, any questions to take up some time, and yeah, I'm only too happy to any questions on any chart. It's just applies to any charts or whatever you want. I've just come back tonight to this FTSE, because obviously that's Ash's interest, and yeah, so I guess he can put his slant on it, which is good. And let me look. There's a couple of things I just crossed my mind when I was this together in my head. Couple of things something jumped out of me a minute ago. What was it? So, oh yeah, so I'm looking for what's in the future, obviously, and we've now got some. I haven't updated this, so I was just doing that hurriedly. And we can use the points of reference that have become obvious on the chart, manifest themselves on the chart in the last week or so. And one of those is here. I mean, you can see the 30-degree runs here. And what I did this time, just because I used these points and tried to shoot them forward to see, well, what might we see in the future, the near future. And then to confirm that, I reverse pedal from the previous highs. So I had some half cycles and things on here, which I've taken those off just to simplify it, to make it easy for everyone to get a handle on. And if you look back across the chart, this was an existing one here that we had used prior. This one also. And this is where I was up to, that's right. So from that point there, we had this one projected into the future, which worked out to a day before, which is time by degrees by the sun, but by the market it was the following day, as Ash just pointed out. And where that came from, a double check for me, because I'm still learning a lot of this stuff, some of the nuances of it. I just take that point up there, which we now know worked, and shoot it back to wherever it might go to. In this case, 31 degrees comes out, obviously where it is, you can see that. And you may or may not remember, but earlier on, we followed some dates through to this point here. In fact, there's the vertical line I projected up there to highlight this date from over here, which was 30 degrees from. Do you recognise these points, Ash? I suppose you recognise this chart there. Anyway, it doesn't matter much.
Oh yeah.
It's just the footsie. Yeah. So this point here, we had this on the chart as a well, we didn't have to. It put itself on there eventually, of course. One of our projections came to that date, which we put that in advance. This one, we then projected forward, but we did that after we used. Oh yeah, there it is. There, look, from this date at the high, I moved it down here. Remember, to make the chart easier and be closer to where the target was, and the target was the bottom in that case from that high, and that panned out. We proved that before, and then from there, now we've managed to project it within a day. Once again, within a day. In this case, it's probably a day to reset the cycle because of the fairly good run down there. Often when you get a longer run, you need a full day to reset the cycle, which is exactly where it comes in. And that shot it across to that previous top. And from there, we're into the future. So it's just backing up all those things. It all fits in you, so you can't rig any of it, because if it doesn't line up, it's not right. You didn't do it right, or it's not, you're just not telling the story. Because to me, it's just obviously another page to the story. And another interesting thing that I thought of that I haven't explained or expanded on yet, and I know this will interest Ash for sure, it's really simple, is that you notice, and I said about not sweating about the days, the odd day, it could be 24 hours or, whatever. Well, 32 is sort of getting, in my opinion, my early opinions was that, well, this is a bit out there, 2 degrees, that's a fair bit, it can be. But I'll just show you why. I can really easily just make this into a calendar day chart. Now, if you look at the calendar day chart, the reason we have 30 degrees is 32 degrees. Now, I've got to move this just to adjust it. So just let me adjust it and I'll show you how this works. So we come across to, there was the day, the time it was working, but that was the time by degrees date. This was the nearest thing as far as trading goes from memory. This is all lined up. Then all the day, oh, that's right, because it was nearly hit into the low, weren't we? So it's on the trading day chart, this is the low before the actual low. So it's 1 day out, in other words. Now, if you, this is double whammy. So this is that's a really good explanation. See how there's a gap here? So there must be a weekend there. And here at this end, look, there's a weekend here as well.
Yeah.
So that's why we get those odd. In fact, I found one since 33 degrees because for the same reason. I didn't realise this one was like that, to be honest with you, because I just checked it a while ago. I noticed this end I was going to use for the explanation. But when you look at it there, if you move to that date, it ends up on the weekend. Well, it can't work on a Sunday, so it starts on the Monday, you see.
Yeah.
On this end, it can't work on the Saturday or the Sunday, so it works on the Monday.
Mm.
So I know it looks like it's a bit wishy-washy, but there's reasons for that. You see, the sun just doesn't go out for 2 days, so it's still our timing factor. So we've just got to when some people trade off a calendar day chart, and in this case, it would have been simpler if you were learning to do that, because you would have understood why you had what did we say it was? Now it was 30. This is another thing. You say there's 4 days there. There's 2 days here, and 2 days at this end, 2 weekends. But when you put it in and line it all up, this is how weird it is, you see. There's not 4 days in it's not 34 degrees, is it? It's only 31. So even though those 2 days here and 2 days there, it's almost like they've been absorbed into the system to make it work, isn't it? It's incredible how that works, but it gives you a bit of a picture. You can understand what I'm talking about, Ash. Am I explaining myself very well or not?
Yeah. Totally agree. Yeah, totally understand, mate. And it's interesting because it could actually be the Friday as well, I presume. The Friday before.
Yeah, so that's right. So you've observed that already. You said, well, this wasn't the actual time by degrees date, but the day the market turned, the first day we could trade it was the Monday, you see.
Yeah.
So you imagine then, okay, so hypothetically, you got your head around, that's good. So we've got to just say it doesn't in this case, but just say it did. So it worked out on the Friday, then you got the Saturday and the Sunday, then you got the Saturday and the Sunday this day. You think, well, that's 5 days out. But when you put it on, the calendar day chart and allow for the things we just spoke about, in that case, it would only be 1 day out because of the Friday, not the 4 days out because of the weekend, you see. So that's why it's hard to get your head around, and how a lot of people can't cope with it. Because I keep saying, don't sweat the small stuff to get you to look past that. But this is a good illustration why it happens and why I say that, you see. You don't need to worry, mate. It just takes care of itself. The day we need to trade it, it works, and away we go. Can be a day out, like you say, you've accepted it, it's a day out or day before, day after, 2 days, as you can see, whatever. And it'll still come out within that 1 or 2 degrees. So 30 or 30 is our ideal time, obviously. And a day with the weekend thrown in is just nothing, you know what I mean? So, yeah.
What next, mate?
What's next?
Yep.
The next thing,
For me, it's a bowl of soup and a wine. I was really talking about the market and the next turning point when we can look forward to another.
Wine by degrees for you.
Yeah, wine by degrees. That's right.
Good one. Wine by degrees. I have to work that one in somewhere, won't I? Excuse me. Go back to trading day. I'll just clear my throat. Excuse me.
Guys on YouTube, by the way, as I said to the people in the room before, if you've got any questions around this, feel free to ask, because it's completely out there in terms of what you're probably used to. And I can see heads going, my God, what's he doing, this bloke?
Okay, so we've just had that little explanation, and we backed up the proven points now, I guess, for what we asked, what we expected happened. And all we simply do now is project those into the future. It's as simple as that. Still got our sun time by degrees, vertical dashed lines here. And as the chart predicted, we had the sideways movement, and you don't know how long that's going to be all the time. I haven't perfected working it out exactly. Oh, actually, probably, well, the sort of thing you would do is if I was doing this myself, I guess. Unless I do a bit subconsciously, I suppose. But that's the low there. We don't look like we're using that low for anything else either at the moment.
I think, you know, one of the things I'm loving about this the most is that I've told people, I told people the weekend before, I think it was, that the next one, it was the 22nd, and I'm seeing a lot of those people this weekend, and they're going to ask me, did it work out? And I'm like, yeah, FTSE's down 3%, which actually, and this is the thing, isn't it? It's all relative. The FTSE's down. In fact, it might even be more than that. Currently, from the day, the FTSE's down, not quite 3%, but it's getting close to 3%. But when you put that in context, that 3% move has not been evident for at least 3 months. You know, it hasn't been evident since March, which actually was the last time by degrees, which is the scary one, really. But yeah, so it is significant. There's been a significant move in the stock market over the last 3 days.
Well, it was all in the charts. Actually, all we had to do was read it, mate.
Yeah, well, that's the other aspect, isn't it? That is the other aspect, is that the charts were telling us that. But I think what I liked about it is that I held on that little bit longer, because I thought, well, actually, you know what, if time by degrees is a thing, then this is going to, because the setup doesn't tell you how far a market is going to move. It just tells you that it's going to move. Well, potentially, if you got a good setup. But you know,
that reminds you, sorry, you go. Yep.
Yeah, we'll just go. You know, but with this stuff, you're gonna just maybe have a bit more confidence to stay in just for a little bit longer and see if it does actually flush things out. And then that's exactly what's going on right now, flushing out a lot of hands.
Yeah, and I've had to learn to do that too, actually, because as Jeff will tell you, I always get in or out too early, and this has been great, because now if I see the move, in fact, there's a classic on what was that last one? We got in way too late, Jeff. Was it anyway, I can look it up.
Oh, BOE?
Yeah, it might have been. Yes, it was too. That was one of those two, actually, wasn't there? That was one of them. And yeah, so it took off, and we missed it, and it was a poor setup. So you probably wouldn't have. I didn't get in. That's right. What I'm thinking about. But then the continuation trader indicators told us, in conjunction with time by degrees, that it looked like it was going to keep going. So I said to Jody, I've said, we'll know this anyway. Might only get a few percent, but it'll be a good experiment to see what happens. And yeah, we creamed it. We went for another 2 days, and then it got a bit weak. So I did, because we'd already tested the friendship, I just said, we'll get out, take the money. That's what we did, and it was spot on, mate. It was just within a few points. It was amazing. So it's yeah, it's
they're
really,
the best.
Yeah, it is. It was really, yeah, that's right. It's like, yes, you know, like you just nailed it. And it's,
Yeah.
yeah, so that's, yeah, exactly. So here I've just ran, and this is another good example of what we just talked about. So we've used this, we can check this low in a minute, but anyway, that's on the chart. We don't need to argue about it. It's right next to time by degrees. I run across there with a half cycle, so 15 degrees. Now that says 17, and you know why, don't you?
Weekend.
I reckon so. So there's something going on there. Yeah, there it is there. It's in the middle. Actually, there's 2 weekends. Look, there's one there and one there again. So that's exactly right. So we don't have to sweat that it's days out. That's all good. So there's our next time by degrees date, and that's right beside the turning date. Ash, so you know our other time by degrees setup, that brought us out, didn't you? So it was that one you said we used, didn't we? This one, the one before the turn, is that right? We said.
Well, that was the 22nd. But as I say, it was interesting because actually, if you look on other European indexes, the 22nd was right on the money. It was perfect time.
Yeah. Hi, Ellie on YouTube. How you doing? Thanks for checking in.
So there it is there. That was the date I nominated because that was the one I was using. And there we go. This half cycle here has nailed that there, which is bang on that date. Well, so perfect. Oh, sorry, we were going, yeah, well, that one all time by degrees, of course. Time by degrees. You see, this is another good example where it's so flexible, is that market hadn't reversed there. It's still falling. There's the time by degrees. That's what turned it, but that's a Saturday. So it can't turn on the Saturday. So it'll turn on the Monday or start taking its action from the Monday based on whatever news over the weekend, or whatever it is. So there we are. So that's the weekend. And then if you bring it across to time by degrees, because that's what would have triggered it, then your first tradable date, and that lines up with the actual day it happened. So we'll give or take those days here or there because of bits and pieces. You can actually pick it all up if you do a bit of, and you learn to, as you do more of it, of course, you learn to identify that yourself. And on my own charts, I do half cycles everywhere.
It'd be very unusual if you would have traded in that area, however, because your indicators wouldn't have told you to trade, surely.
Here?
In between the low that you picked out.
Oh, and yes, yeah. Absolutely, you're absolutely correct, Jeff. What this does, though, you see, we're looking for, at that stage, I had already nominated that it was going to go sideways. Now we know it's going to go sideways because of, okay, so here's no man's land, and here's no man's land. So we've got there's no built-up energy in the market. It's the MACD is near the zero line. So there's nothing to drive it up. There's nothing to drive it down. If it started from up here, we know where it's going. If it started right down the bottom somewhere, I'll just move these pretty pictures. Now, for example, here, there's a fair chance. I'll put this down for you guys so you can look at your chart. Actually, I'll go, you won't worry if I change the chart, will it? So you can see,
don't worry me.
You can see a different chart now, Ash, can't you? You guys got that new chart?
Yeah.
Okay. So our indicators, well, no, what I was just saying was if our MACD was well below the line, we know we've got momentum to get back up through the zero line again. And we've just had a good run down, so it's a fair chance it's not going to go up, is it? It's going to reverse. That's why, we can see how far below the zero line at the graph and the line is. And then in our DMI tells us we've had a good run down. So this is only strength. The blue, our ADX line is only strength. It's not the direction. The strength was up. We are strong trend, in other words, and the trend was down because the negative is on the top. It's going up strongly, in other words. So in other words, the market's going down. I think that's why a lot of people can't read that one very well. But that's what happens. You understand how that works, Ash, that one, do you?
I know ADX. Yeah, ADX was actually the first indicator I learned.
Yeah, so I guess there's others that might benefit from that explanation anyway. So the point is, so we know what the trend was. It wasn't going to go down. So, but here we've had another little run up, which gave us, and notice the ADX was still not far above the zero line when this peaked out. So this is the area that's of interest at the moment. So after that, we said that it would probably go sideways, and the reason was because of these indicators. It's as simple as that. So if you can read your indicators, you can tell, because everything was around about the zero line. It didn't go up that strongly. Took more days to get there, climbing the wall of worry, all that sort of stuff. We were near the zero line, the 22nd, where's the dates? That was 22nd of this month, I don't remember that. You said that when you said? That was last month, wasn't it? That was back here, wasn't it, Ash? That was the 22nd of that was the 22nd of the 4th, I said was going to have sideways movement.
Yes, you did.
Yeah, so 20th and the 24th was about when I said it'd probably go sideways, or so 22nd out there somewhere. Sideways, and that was all because of what's just what the indicators are telling us, basically. So we've gone through all that, and now the business with the half cycles not being relevant, well, they are in that we just said you wouldn't trade. Jeff rightly pointed out you wouldn't trade that, and in fact I think that was the bar there, wasn't it, Jeff? So that's our 17-degree bar, which came out to about 17 across here somewhere, roughly right. Don't sweat the small stuff. So would we trade that? Well, have a look. So not really. It just had no momentum to go anywhere. If anything, it's indicating it could go down from there, but the RSI is flattish, and the trend on the DMI is flattish, and the strength of the trend is slowing down, and that got slower and slower as the week went on. But this gave us a clue here. This is pretty advanced, this one, but I'll just talk about it anyway. In that these two, the line and the graph were a long way apart when it got back to the zero line, and the histogram had dropped well below the zero line, and that tells me that this had a very good chance of being a continuation trend. In other words, it's going to keep going down. But I wouldn't have known that at the time, but that would be in the back of my mind when I was watching this. And then we can see that it came back up, obviously, and the line and the graph started to level out, get closer together. So that gave us a confirmation of the sideways movement. But you've got to remember, in the background in the chart was this weakness. And what's happened is we went right through the zero stage, if you like, and then eventually, when time by degrees hits, you can suspect that there will be the continuation of this trend, because this was so far apart when it hit the zero line, and that's exactly what happened.
And you guys in the room, when you hit that time by degrees, if you don't understand Phil's indicators and how they talk to you, because Phil's been studying these for years, you can use your own methods of getting in the market. Like, there's a clear reversal bar there, for instance. If you trade reversal bars, then you may well be able to get in the market as well. So it's not a compulsory thing that you use the same indicators Phil is. You can find your own methods of getting in the market.
Absolutely, and I've said that, reinforced that earlier in the shows as well. The stuff that Ash does and the stuff that Jeff does is all absolutely 100% valid and fits into this wherever you want to put it. It's all the same. It's the same big picture. We're all reading the same book. Some of it's in Spanish and some of it's in Chinese and some of it's in English, but it all fits. It's all the same.
Did we get to whether...
Sorry?
Ash, what were you going to say?
I was just going to say, incidentally, it was actually a wave rider. It was, you know, it was a wave rider. It was my setup. It was probably your setup. Phil's got his setup. So, yeah, just to kind of back up what you're saying as well, mate. If you know your indicators and you trust your indicators and you sort of like trade with these indicators, then all you really needed was this kind of to go have a really good look at this particular period. You know, have a good look at your indicators. What are they suggesting? And see if you can trade something, because they did. There's lots of things. I'm looking around the charts now. Lots of things that lined up to the you know, on the money on lots of strategies.
Yeah, that's right. That's right. And I think people get hung up on. Well, I guess you got when I was taught, you know, David used to say, well, you've got to find what suits you, what fits your brain, what
Yeah.
you can relate to, you know.
Yeah.
So it's all but it's all valid. There's all those things are valid. And the other things we mentioned too, I mentioned with George the other night about the system he was using was uncanny really, because I've adapted my system to trade on the MT4 platform, and the way I was explaining to Jeff, actually, which I haven't fully expounded on that yet either, but it's really difficult for me to put stops on that system because of the 24-hour cycles they use are from around the world. It's got nothing to do with how the stock market works, or the in my opinion, the Forex and stuff. It's all set up so you fail. But once I converted it to my system, so I use my daily chart for information, and then put the stops based on my chart, not the Forex chart. Or in my case, the Aussie 200. I just sat in that trade for 2 weeks, didn't even bat an eyelid. Didn't even lose any sleep because I knew where it was going. I knew where the stocks were. I knew where it had to go. But if I did it, I tried to do it on that like you guys do it with the, you know, put your stock above here, blah blah blah. That just makes I just can't get my head around that at all. But it doesn't have to, because I've got my system, and I just convert it to my, because I'm probably, you know, you guys are a lot further, more educated in the different types of trading than I am. So I just convert it to what I know, and it applies the same. And I just apply all this to it, of course. It's really funny doing an MT4. I do all my calculations on my own charts like this, and I open their chart, then interpret what it actually says because it's in Chinese to me, and then I just nail it from there. It still works. It's perfect. Yeah. So it's all exactly. So yeah, that's where we're at really. So now, and the next question, and I wrote this down because you've brought this up a couple of times now. So I'll just, if everybody's happy to just move on a little bit. When we've got, hang on, well maybe we just go a little bit further. We've got our half cycle there, which obviously worked, and we're looking for something close here now. We use this cycle because it worked over here. So once again, we can use our half cycle. So our 17 or 15 degrees is there. So we run it across and how far we're going to go, and it comes out about there. So that's another. I'd place more value on the 30 degrees in the half cycles, but as we've seen, the chart often, look, there's a classic point right there. See how it doesn't, that's time by degrees by the sun there. This is time by degrees by the sun here. That's 3 days away. So often that half cycle there will pick up the next half cycle. Even though it's out of whack from our 30 degree cycles, it'll pick up where the next one's going to be. So we just run one from there anyway. So there's one there, 15 or 17 against the weekend again. So these are now, so the reason we do this is, we're not going to bet the house on them, but what it is going to tell us is when we need to start looking out, when potentially can something happen. So with a run, I don't know, actually you're the expert. I'm suspecting if I was looking at this and something I was charting, I would say, well, we're not going to get 10 days run down at the moment, or maybe we are. And if you're looking for, say, a 3 or a 4 day run in, or whatever your normal average true range is, then you can look for something fairly close. So that date there might be the one you want. So the date on the end of that Gann emblem is the 29th of the 5th. And interestingly enough, time by degrees is the 30th, isn't it? Yeah, it is.
It's another Monday.
There you go.
Third Monday of the month, is it?
No, it'll be the fourth or fifth, fourth one.
Okay.
Fourth.
Oh yeah, well there it is. Still needs time by degrees right beside it. Yeah, so that's exactly what it's telling us precisely. So this confirms it. So that's. So
yeah, I mean, if it's next Monday, do you know what I always find interesting about these markets is that Mondays, when they have these big flush outs, that Monday tends to be a bit calmer, and when you might see at least some relief, a bit of a relief rally going on. So even though it might not be a turning point,
Yes.
it may well be a relief rally.
Yeah. So that'd be the next one to look at. That's for sure. Yeah. That one, that's that half cycle there, and then we've got the other one from there. So there's those two.
But of course, we're closed bank holiday. This Monday's bank holiday.
No, we don't have a show this week, do we? No.
Yeah. So the UK's market's closed on Monday.
Okay. And then after that, of course, you just pick them up as you go across. So the next one is that time by degrees there, which is the 30th. Is that the one? No, that's the 5th. That's the next one. So the next stronger one would be the 5th. So that'd be the two dates to watch at the moment.
Right.
Happy with that? Happy with that?
Yeah, mate. Brilliant. Thank you.
Now the other thing I was just going to address with Ash, or with everybody, Ash has asked me this a couple of times, or made this statement, and I just want to cover it off a bit. That's this one here. So what I can do is, I don't need, well, you can as well, but we won't complicate things for now. You just don't realise how much stuff you do till you've got to explain it to someone, do you? So I've got two indicators I use here. And I'll probably just start with the other one. So this is called a ZZE, which is a zigzag indicator. Zigzag extension, it's called. Now, I don't know whether you guys use anything like this, but what I can do with this is pick up that low, the higher the range. I've gone the wrong way, but I'll show it to you anyway. And we'll just say that's the bottom. It'll project where it's possibly going into the future. If it was a turn there and it went up, these are the points we'd be looking for. That's a real rough picture. I'm not going to go into it any more than that at the moment. What we're going to be looking for in this case, we're looking for a down move. So we start our ZZE from the down move. Now, what I usually do is you use the last down move to give you the first indicators of where it's going to end up. We won't complicate it for now. We'll just start here because it's really easy and obvious. That's not right, is it? Oh, yes, it is. Yeah, so there's our down move. Don't take any notice of the C I'm putting there. I'm just putting that on the chart. I'll use that for other things. But that tells us there. So I would say to you, Ash, that's 50%. This is a double calculation. I'm going to explain those. This particular one at face value, that is 50% of that range there, roughly.
Right.
Right. So your primary target now is there.
Yeah, which would coincide beautifully actually with the trend lines. That's really cool.
Well, there you go. And then your next.
But how is that different to a FIBO retracement tool?
Sorry, Jeff.
How is that different to a Fibonacci retracement tool?
Actually, looks very similar. I've got a fib going up, and
yeah, it is. It is. So this is the second part of the thing I was going to explain. So sometimes, and this is what Jeff asked me the other day, I say something stops in no man's land. Well, on this indicator, this stopped in no man's land. It didn't stop at it didn't stop at the pressure point, you see. So I call that no man's land. It might have stopped up here somewhere. How do you
what's the asset? Sorry, is that the FTSE?
This is a FTSE, yeah.
Well, it stopped on 7,600, didn't it? Whole number.
Yes, well, there's a reason for that. So I'll just delete it and I'll show you another way we do it. So what we want the first range out from here is what we're looking for from there down. And to do that, and we want a down range, so we pick the low. We want a down run. So we'll pick, say, from, this is probably getting a bit fine, but I'll show you anyway, because it'll illustrate what you can do. So this is our points here, very close now. And there you go. So the last range in gives you the first range out. And that then tells you exactly where it was going to stop.
But could it not stop on any one of those?
Yes, they are pressure
Yes.
points. They are pressure points on the way down. That's correct. So you're watching these as you trade in the market. So how do we know? In my language, this is how we know.
You go back to your indicators.
Go
Yeah.
back to your indicators. Is it going to stop, or is it just getting going? Well, it looks to me like it's just getting going. So it just runs down, runs down, runs down, and the indicator is getting stronger and stronger and stronger. And today that's where it stopped. But tomorrow, looking by the indicators, it's going to keep going down. So then we need a bigger range out. So what was the second, that number I gave you? Well, I'll probably confuse you if I put them both on there, will it? Oh, no, wait a minute. Let me look.
Not hard to confuse me.
Now, this is the thing. You just got to learn to use these things. Well, you know how reliable this is, Jeff. You've seen it work before.
Yeah, I have. Yeah. Yeah.
And this is an indicator you've always got to pay for. So that gives you an idea about something, doesn't it? So that gives us the range that I gave you a minute ago, Ash.
Yeah.
Now, just to make it easier to see, I can make, wait a minute, I can make this a bit easier. I go move that over here. That's got those separate now. So the first run out was that one there.
Explain what you mean, mate, by first run out. What does that mean?
So from the high, we want the first run down out of the high. It leaves the high, it's going somewhere. This is the first run down from the high.
Yep.
So to find the point we need on the first day of the first run down from the high, we choose the last run into the low before the high.
Yep.
Okay. So the reason I put these two on is because they're so far
Not
apart.
the previous low, but the next low, right?
Sorry, just clarify that for me, please, Jeff.
So if you're coming from the high at O, you're going to use the next low. You're not going to use the low of the range.
Well, that is the low of that range.
Yeah, in that period. But the range for me is those two bigger seller bars. So, and that was the question. Why wouldn't you use the low?
Which are the bigger seller bars? I can answer the question, but I just need to know what you're talking about.
Yeah,
So
just go back to the CA. Just go back to the next low.
A here.
Yeah.
No. Oh, I see what you mean. You mean from there?
Why wouldn't you use that low? Yeah.
What, from there to zero? You mean?
Yes.
Oh, well,
no, 0 to there.
Because that's reverse.
Right, you're moving forward. That's the answer to the question, right? You're not looking back.
Yeah, absolutely. I don't care what happened yesterday. That's right, exactly. Yep. So that is the last. So this is micromanagement now. This is how you manage your trade, you see. So the last, whether you like it or not, that's the last run down before the high. I know it's only one day, but that's the range. From there to there, that's the run down. Now I'm going to show you something else as well, but I just want to point this out because this is important. This took me ages to get my head around this. So you go, okay, so it's got to there, and I'll highlight that so you know that those lines are valid to the ranges we just chose, okay? Make it a bit bigger again, just to spell it out a bit. We hack together. And that's where we're expecting it to go. Now we've run out of range. So it's going to, whether you like it or not, it's going to hesitate there tomorrow. If you were doing a 2-minute chart or a 4-minute chart, you'd see it hesitate on that number. But then where do we go? How do we know where it's going to go from there? So just to exaggerate, this is not what I would do. I'm just going to exaggerate this so you can see the illustration. And instead of using that range, we use this range here. From there to the high. And then put it on. Then where's it going to go? So using those ranges, which is not the second range out where we might expect, but we can, if we once say this got further down here, this would be absolutely valid. And I said I've exaggerated this to prove the point, just to show you the point. So there's the points. If we're using this range as a reference, there's the points we look for our resistances now. They're probably still valid along the way. They usually are. And often they actually meet up. The ranges, it's amazing how many times the 161% on one range will meet up with 138% or the 68% on another range.
On another, yeah.
They'll all line up. It's all Fibonacci. So it's all, that's just the laws of nature. You can't argue with that one. Everyone knows that, I think. So that's what we're doing there. Then we've got bigger ranges. So tomorrow you'll probably see it'll line up with something else I'll show you in a minute. But I'm just showing you, we'd go from that little zoomed in range where we want the first run out. So we use the last run in to the high. The first run out from the high, we use the close-up version. Or call you whatever you want to call it. The closest is the close-up, I suppose. And that gives us into there. And when we get onto the bigger range, we simply change over to the bigger one. And we're using those points that are highlighted now. So those will probably be valid on the way down. The 50%, the 61.8, 100%, all the Fibonacci stuff's the same. So where I would go from that first, the last run down to give us the first run out of the high, you would just simply go to the next one. So we need some more range. So we go then to, this is the second last, yes, it's the second biggest run down before we get to the top that we want to trade. So this will give us another series of ranges. And that's the one we would literally at the moment, this is what I would be using now. So we've grabbed the second, you see how that was the last run down? This was the second run down, and it is also, we chose that because it suits the range we're looking for. This is what it's based on. So that's the second last run in, and now we want the second run out, the second day out, the second part of the range. That's the one we use. Now if we go back, so you got that in your head, so you understand what I'm talking about. Now we go back to the one that we've just used, which we agreed was half reasonable before. We put it back on here. Okay. Spread it out a bit more to give us a bit more clarity. That's the one we're using. So see how they almost match up here, you see. So hang on a minute, that's not right, is it? What did I say?
It's giving you a zone anyway. Yep.
Yeah, there it is there, look, yeah. So that's this one. And this was the other one, which is just above it. So that's going to be a real, it could hesitate there, it might go straight through, but these are the points you're going to be watching, Ash, you see?
Yeah.
those ranges. And then once it comes down here, if it comes down for a week, then we go to the next range up. So, and I'll just make a mess of this anyway for the sake of just seeing where it comes out. So this is the next range, the next last range into the low before the high. Nail it in there, put that down there, and we highlight that one. And see, look, there's one there lines up exactly, look, a lot of those pressure points are the same. And what you'll find is the more of these that line up, the more likely they are to observe that point.
Also the low, remember that range I was talking about? It's going to retest that area. Is that what we're saying? It's going to retest that low. At A, the first A. There, yeah.
Hang on, A's down here.
There.
Yep.
So that confluence lines up with there.
Yeah, well, that's right. Well, it was testing. It tested that up here, didn't it? It tested that just there.
No, but it's going to retest it, is what I'm thinking. That would be my first thought.
Yeah, absolutely. Yeah, could do. That's right. Yep. Then you use all these in reverse. But what you do then is you do. So we're not going to get too technical on this because there's a bit involved, isn't there, when you think about all this?
Yeah, just a bit.
But
and we are running out of time as well.
Yeah, well, we can go anytime you like, mate. So then we can simply say,
last point.
We're looking to go the other way. So we would pick, oh, I don't know, say we pick this run up into the high because that suits our range. There's our B, and we're expecting it, the retest, just like you said, and there it is. Look at that, it lines up exactly there.
Yep. Makes sense.
So that's how you zoom in when you're actually doing your trade. After you've got
And like you said before, it really is a different way to find a very similar process.
Yes.
At the end of the day, which is great. I mean, it's another layer. Like it. More layers you can put on, the better, especially in Tasmania where it's cold.
You haven't seen cold yet.
No, I know. I know. I have got the fire a lot, though, I got to tell you.
You and me both. All right, mate. Well, if you've had enough, that's really good. You got something
All right, mate. Thank you. Much appreciated. And, well, sorry, the 5th is our next TBD, right? We look for an MRI at a TBD.
I think it was, wasn't it? Are we still going to do Sunday?
Yes.
Night, you guys? Yep.
Sunday, I'm not here. I'm going camping actually this weekend. Molly's, it was Molly's birthday on Tuesday, and we're taking her camping for it. She's got this little music festival, so we are away until Monday.
Well, I'll catch up with you on Tuesday then, Phil.
Okay, mate. No worries. We'll see you then.
All good. Thank you, mate. Have a good weekend. Actually,
Thanks,
I'll talk to you before then. Okay. Anything that we need to concern ourselves with, Ash, before we go?
Not really, mate. No, Nasdaq is still of interest, but it's sort of it tipped out of its layer and then it's gone back into its range again. So I'm going to keep my eye on it. I think the markets might get a little bit of a fluctuation. I think it's going to be a bit of a tricky period. So, but possibly while we wait for that US data, we could get a few hours where it's just a bit tough. But I've got to be honest, looking at the Nasdaq short for sure, but otherwise I'll probably be looking into next week now.
Yep. Okay. And next week, of course, is the last couple of days of the month. Pardon me, which is always interesting as well.
The 200 might look worth a look at a short, Jeff.
The what, mate?
The Aussie 200 might be. I've looked at it, but it's probably going to be heading down too, isn't it?
Let me have a look. The weekly chart. What's that telling me? Not a lot. We're in no man's land here, but the daily chart. 3 black crows forming at a support level. So yeah, same as everything, mate. I'm expecting a bit of a pullback.
Yep.
Then I'll look for continuation. And I think every chart's exactly the same.
Yeah, they seem to be, don't they? All my stuff's the same.
Yep. So nothing's changed there. Here's the first sign. If this bar closes in 10 minutes, as it is, I'll call that a morning star. I don't care what I call it. Is that a morning star for you, Ash?
Not quite, no. I don't think
it's got to take out this.
Not take out, but it's got to get a bit. It looks like it's only 50% into the body of the first bar.
So it closes on DS1, be okay?
Yeah, that'd be great.
Okay. Well, that's what I was talking about before, guys. Once I see that, that gives me the indication that this can reverse. Not full-time, not for 10% or anything like that, but on the 30-minute chart, right? So the 30-minute chart's trending down. 30-minute chart has an untested daily pivot above it, a long way above it. This is the first potential sign that I can trade it. Once I see, if that was to close as it is now, it's a recognised reversal pattern. Then I'd love to see it hit this trade line, come back and give me a higher low. Higher low confirms the reversal pattern, right? So that's exactly what I'll be looking for. And if I do get that, then I can trade it up to here. Hope that makes sense, but that's exactly what I'll be looking for on a 30-minute chart. Nothing else has changed. CAD Swiss, like I said before, if I get a close below where, except if I get a bear bar, no, I've still got support here. See, if I get a close below this support confluence, I will close it because I'm wrong if that's the case. But at the moment, I still think there's upside in CAD Swiss. And the Kiwi, like I said before, we're well in profit here. Taken our first profit. We've moved our stop loss just above this low here. So it can only be a winner. It's just a matter of how much. Am expecting a retracement today, maybe back to the daily pivot. If that is the case, I will add to this position by putting a short underneath today's bar. Okay. Which will mean I'll be trading the second position for nothing. It'll be absolutely free trade because I'll move my stop loss down. And that's exactly what I'd love to see. Can it happen? Don't know. Chart's telling me we're going to find support at this level, very much so. It's just a matter of how far the retracement is. We shall see. Everything else, I don't have a real watch list apart from that. I said this morning that I think dollar yen is the P at the moment, and I would not be expecting price to come back below yesterday's bar, which was a clear breakout. But it's a combination, because this is a strong level here that dollar yen's broken above. This 137 or now 138, right? So it broke that. That was the breakout bar there. If it was a false breakout, price would be back here by now. It's not. It's retested that level and it's still going. So I expect it to go to a resistance area. And we've only got really weak resistance right here at this level, 140, as it appears. I'm expecting this to keep going. Really am. So I think it could have been a worse idea than to buy the top of yesterday's bar and put your stop loss below it. That's me. I'm done.
Good stuff, mate. All right. Well, I will.
It's 9 o'clock.
Won't see you Sunday. Won't see you Monday, but I will see you guys on Thursday.
Enjoy your camping, mate. I hope it doesn't rain. I hope.
Oh God, no! I'm not here Thursday either. I just remembered. Oh, I might be in briefly. I will be in briefly. Sorry.
All good. We'll be here.
It's obvious we got holidays next week. See, we got school holidays, and it all gets a little bit tough. Yeah.
Mate, just take it off.
All right.
All good.
All right, mate.
Okay, I'll catch you at Christmas time, right?
Yeah. Yeah. That's a holiday. I won't be around for that.
Oh, bugger.
See you in the new year.
Have a good week. Have a good camping trip, right?
Thanks, buddy. Nice one. Thank you
and
so much,
everyone
Phil.
else.
Brilliant stuff.
Thank you for being our trading buddies, as always. Look forward to catching up, not on Monday because it is a bank holiday in the UK, but next Thursday you'll see myself and Phil doing it the same style. Catch you. Have a good weekend. Bye-bye for now. Hooroo.